There's been a few changes in venture capital, probably not nearly as much as there's been change in the internet. We're behind the times. Hopefully you as entrepreneurs are a little bit more ahead of those times. I'm going to talk a little bit about what I think are driving those changes and why I think venture capital and angel investing should be changing to accommodate that. Some people agree with me, some people don't. We'll see whether I'm right in a few years, and in the meantime we'll work on it. These slides are not online yet, although a version of them is on SlideShare if you want to check that out. So I heard a little bit about the previous panel, and a common refrain from a lot of investors is that you have to be going after billion-dollar markets. I think that's more a reflection of the size of the fund than it is what the opportunity for the entrepreneur is. In fact, I would argue strongly these days that a better strategy for most entrepreneurs is to aim for smaller markets. Why do I think that? So small is fucking beautiful, baby. Small is not bad. As a man who's 5'8.5" with a long haircut, some days I have to believe that. There are other examples of small is beautiful, specifically from sports. Ichiro Suzuki and Steve Nash are two of my fans, and I don't think Lady Gaga is all that tall, but she certainly powers it out. Let me make an example of these two questions. If you had two startups who were going after a female demographic, and once, hey, you motherfuckers in the back, shut the fuck up or go upstairs. I want you to pay attention to me. Yes. I can't see you and call your names out, but I can yell really fucking loud. I will come out there and call you out. Do I have your attention? People in the back, wave and yell at me if you can see me right now. If you're drinking at the bar, you have an exception. All right, great. So, if you have two startups, and one of those startups says, we're going to focus on all women, hopefully online, maybe in one particular language. And another startup that said, let's focus on mothers aged 25 to 35 with 2 or more kids in US metropolitan areas, let's extend that to North American metropolitan areas, who have a household spend, that's an error, $40,000 to $100,000. Which do you think would be able to build a better product and target customers better? People who think number 1, clap. People who think number 2, clap. Right. The point being, I can target the second demographic much better. If I have half a fucking clue as an entrepreneur, I can build a better product for that market. Now, there may not be as many of them, but because online distribution is so much better these days, because conversion is so much easier these days, I don't have to go for the biggest market. What I need to go after is the most easily accessible customer that I can build a great product for. And in these two cases, the second one is the clear winner. Furthermore, if I looked at that demographic target, I would probably guess that there's at least single-digit millions of those target demographic, probably hundreds of thousands, no, without any question. If I can get those 100,000 customers to pay me $20 a month, I've got a big fucking market, at least for an entrepreneur, maybe not for a big VC. We'll come back to this point, but let me again leave you with small markets are great. You can build better products, and with today's online distribution, you can get to them easier and better than ever before. Do you get that? Do you get that? Do you get that? All right, so any investor who tells you you have to go after billion-dollar markets, walk out of the fucking door and go find an investor who will deal with $50 million markets, because $50 to $100 million is probably all you need to be successful as an entrepreneur, both from a satisfaction level emotionally and from a dollar's point of view, economically speaking. Find investors who are aligned with those incentives. Not to mention that's also probably better for acquirers and for other exit and M&A things that are going on in the market these days. So if you want to go after billion-dollar markets, that's fine. There are plenty of great businesses out there. Your odds suck. All right, let's get to some of the topics. I really think the focus on this blows. I don't know if that's just me, but if someone can help with that. So, major changes in the market these days. Primarily, they are the fact that platforms for development are much better. Particularly, they are better for distribution and monetization. I know there's lots of things that they do that are interesting from a technology perspective, but what's really interesting as an entrepreneur is that I have at least 5, probably more than 5, online platforms, I'm talking at least English-speaking languages right now, that have hundreds of millions of users or more. And on some of those, monetization is actually pretty good too. I think people have also talked about incubators and metrics. Why are these happening? Well, one reason they're happening is that cost structure is much lower for building startups. So I can, if I have $1 million to spend, I can actually put $50,000 or less into 20 companies, and hopefully I have some experiments that are successful there. Lastly, I think there's a lot of changes happening in venture capital, and although there is still a place for large funds, the general trend in the market is that much smaller funds are being raised. Several reasons. One is that the performance of venture capital, although historically has always been pretty bad, over the last 10 years it's been terrible, right? And the general changes are it's been accelerating for a few large funds and for a much larger number of smaller funds. But raising venture capital is probably the toughest thing in the world for most VCs. Why am I qualified to talk to you about any of this shit? Probably not. I've been an okay developer in the past, probably a shitty entrepreneur. I had one small exit. I was a pretty decent marketer at PayPal. I did some work for Mint and a few other places. For the last 5 or 6 years, I've been an investor, both for my own angel investing at Founders Fund and now at 500 Startups. For maybe 3 of those years, I was paying attention. If you haven't heard of 500 Startups by now, you weren't listening to me heckling from the back of the room. What are we doing? We are doing a seed fund, generally investing at $50,000 to $100,000 or so. We are also running an accelerator program that's a physical space in Silicon Valley in downtown Mountain View. We're running about 3 programs a year for maybe 10 to 15 startups per program. We have done over 100 investments since last summer. We're at about 108 right now. Some of the companies I've mentioned, we've invested in are up there. We've invested in 2 Canadian companies, Rewardly and Social Story. Yay, yay Canada. Yeah, so some things that I think are interesting. There's a book called The Mating Mind and another book called Spent by Jeffrey Miller. These are largely books about human psychology. Why am I bringing those up for you who are internet entrepreneurs? Because most of what you're doing is psychology, or most of what you should be doing is psychology. You are selling something online. You're trying to engage with users. You're trying to solve their problems, meet their desires. Most of the things that are going through their head are not going to be based on code and features. They're going to be based on a dream, an image, a promise, a pain, something that's pissing them off, something that's driving them crazy. They want to get laid, they want to get some money, they want to make sure their kids are happy and safe, they want to protect themselves from other people who might come after them. These are the things which drive us. Fear, sex, power, money. They're very basic human desires. They have not changed for hundreds of thousands of years, likely millions of years. The internet is not going to change that. It might actually enhance or provide solutions to some of those fears or problems. But the communication that you do over the internet is done in pictures and in text and communicates emotionally to people who have desires. Let me say that again. If you are an internet entrepreneur, your primary job is to communicate successfully to your customers through the use of images and text, emotionally, psychologically, and powerfully. It's not to build code. That's a means to an end. So these books talk about the concept of evolutionary biology and evolutionary psychology applied to consumer marketing. They're fascinating. Highly recommend them. 2 other books, Influence, Psychology, Persuasion by Cialdini. This is a classic. And another one, Understanding Comics by Scott McCloud. Again, talks about the use of images and text, largely static in sequence, and how they impact human psychology. Is there some water or something that I can get? Can someone grab me a glass of water, if that's possible? So I talked about platforms. The interesting thing is, a lot of people recognize there's been changes in cost structure in building companies. That probably started happening about 10 years ago. Largely, we do not pay for software, hardware, or bandwidth. Maybe there's some cost structure there, but not dramatically so. Thank you very much. So everybody recognizes that building startups, or at least the initial stages of building startups, is not a huge expense other than headcount. What they do not recognize is the distribution cost has also changed and reduced. This is meaningful. It's happened, starting 10 years ago, but really more powerfully it started happening about 3 to 5 years ago. With Facebook particularly, but also with Twitter, with YouTube, more recently with iPhone and iPad, and will happen with Android very soon. So, how many people heard of the Sequoia RIP Good Times presentation? Not that many of you. See, this is already forgotten. It happened probably about 2.5 years ago, maybe? Fall of 2008. Already forgotten for most entrepreneurs. So that particular presentation predicted the end of venture capital as we know it and accessibility of funding, not likely within the next 5 years. Some people have said 15 years. That presentation was pretty wrong. Within maybe a year, most of that market had come back. What they were talking to is they were talking to their Series B companies that were spending a lot of capital, that were not break even, and they said, basically, fire a good bit of your staff, pull down your expenses, there may be a lack of capital available. This was a reaction to financial markets crashing, largely due to the real estate and housing crisis in September 2008, roughly speaking. They were reacting to this because they thought it was a repeat of 2000 and 2001. It was not. And even though those financial crises were hard and impacted the venture capital industry, what was happening in the internet industry? More people online, all over the world, more people online in developed markets, young and old, more people spending money online, lower cost structure for building those products, lower cost structure for acquiring those customers. Nothing was bad about any of those things. In the last 5 years, it's been a fucking straight line going up for internet entrepreneurs' opportunities. Macroeconomic picture is fucking magnificent. It has never been better.